The highest inflation in over 4 decades. Now, that sounds bad, but is it really? Inflation is a very nuanced argument. It affects each of us differently, and there's probably no one better to explain the nuance of inflation, the cause of inflation, how it affects us, and even more importantly, where we think inflation is going this year than one of my really good friends, George Gammon. He takes very complex subjects like me and makes them easy to understand. And I asked him, what do you think about inflation? And more importantly, are we going to continue to see inflation this year? Do you think we're going to see a crash in the market this year? What do you see happening? And even what should we be doing about it? What kind of action should we be taking? Now, there's a lot that goes into this conversation, including what the Fed's choices may be. If they keep printing, we have massive inflation. If they stop printing, the markets crash. But there is a third scary option that they're starting to seed through the news media. We talk about that. We talk about supply chains and what he expects to happen with supply chains. We jump up to a bigger level, an international level, and talk about this new potential war that may be happening with Russia and what that means. And then, like I said, I ask him specifically to tell us what he thinks is going to happen this year, what he expects to happen in the markets, and what we should be doing with our money and a plan. This is all good stuff from George Gammon. You do not want to miss this interview. One of my good friends, full of great information that we need to start this year out right. So let's go ahead and just jump right into the interview. Hey, George Gammon, one of my good friends, somebody who's a regular on my channel at this point. I always love having a good conversation with. George, thanks so much for joining me again today.
Thanks for having me, Mark. It's always awesome to talk to you.
Man, you need no introduction. You're definitely making the rounds. Like I said, you've been on my channel a lot lately. Real quickly, we'll just talk about, man, we were at your event. You had the Rebel Capitalist Live a week or two ago, which was amazing. I gotta shake Ron Paul's hand. That was amazing.
Yeah, that was really the highlight, not only of the Rebel Capitalist Live event for me, but probably the highlight of, I would say, the last 5 years. I can't think of anything that's impacted my life or that I'll remember more clearly than having the opportunity to shake Ron Paul's hand last weekend in Houston.
Yeah, that was incredible. My talk I gave was kind of Fed, in the Fed, and
yeah,
he wrote that book in 2009, and so I mean he's been a big influence on me and you. And as I kind of said, he kind of started this whole movement, at least for me anyway. So yeah, awesome that. And I've often thought, like, he's getting old. Like, we need more people like him. But I guess you and I can kind of carry that torch a little bit.
Hopefully. I mean, I'd never put myself in his category.
Well,
but
yeah.
Maybe the collectively between you and me and Lynette and all the other people that are kind of in our space, Schiff here on YouTube or in social media, maybe our combined efforts can get close to the effort that was made from Dr. Ron Paul.
Yeah, definitely not trying to put myself up on a pedestal next to him at all, but just that we're all taking that same message and just continuing to just push that message forward.
For sure.
So at the event, it seemed like the big topic was inflation, deflation. And I think it's obviously been all over the news. The CPI printed 7%, the highest it's been in 4 decades.
Yeah.
So that seemed to be the big theme. And you had a couple panels. What would you say the big takeaway is, or kind of what's your view on this 7% CPI print, and like, where do we go from here? Can they really tame it back down? What's the consensus on that?
It's so tough because you've got to compartmentalize asset prices with consumer prices. There's such a big difference between stocks and groceries. I think if you were to say, George, you've got to make a bet one way or the other. I would say that groceries continue to go up. I think there's a case for assets going down, stock market, potentially housing. Housing takes a long time to really start going down. But stocks obviously can go down very rapidly. We're seeing the yield on the 10-year increase, I think, just in the last 2 weeks since the beginning of the year. We're up 37 basis points on the 10-year. So that's going to put upward pressure on mortgage rates, which could put a lot of downward pressure on purchasing power for home buyers. But of course, there's that huge supply side issue with real estate. I think if we are to take the Fed at their word, assuming that they're going to continue to taper down to zero, and then they're going to raise interest rates 3, maybe even 4 times in 2022, I don't see how that doesn't put downward pressure on stocks, especially if they start quantitative tightening. If you look at the Fed's balance sheet, which I know you have many, many, many times, going back to the GFC, call it 2008, you know that there is a straight correlation. Now, whether it's causal or not, I don't know, but we know that there's a heavy correlation with the Fed's balance sheet and the stock market. So as the Fed's balance sheet goes up, meaning they're doing more quantitative easing, the stock market's going up. When the Fed starts reducing the size of their balance sheet, then the stock market starts to sputter out a little bit. And then in 2018-19, we see the stock market really start to go down. And then that's when Jerome Powell had to come back in and say, oh, time out, I'm sorry. I didn't mean to do that. Let's drop rates back down and let's do more quantitative easing, especially when we had the big repo blow up in September of 2019. So I just don't see how, in the world in which we live today, where the economy is even more dependent upon asset prices and even more financialized, how that process of quantitative tightening could not yield the same result, right? And that means that the stock market going down at a rapid rate. The question then becomes, what does the Fed do? Because instinctively, I think all of your viewers would say, well, that's no big deal because the Fed's just going to come in and drop rates back down to zero. They're going to take QE right back up to 120 billion a month, if not higher. And we're going to see the Fed put all over again. We've seen this movie and we know how it plays out. But they didn't do that before, with the backdrop of inflation going from 6.8 to 7%, maybe 7.2, 7.5. I think I always say there's no certainties, there's only probabilities. But if I had to say one thing that is certain, that's that you can depend on politicians having one singular priority, and that's being reelected. And if, or I should say, the biggest form of kryptonite for a politician being reelected is consumer price inflation. So you can kind of imagine that phone call between Jerome Powell and Joe Biden. Let's assume the stock market crashes by 20% in 2 weeks because of this tantrum, this QT tantrum, we'll call it. And Jerome Powell is kind of insinuating in the news that he's going to drop rates back down, do all the Fed put, if you will. And then Biden comes out and says, whoa, time out, Jerome Powell. The latest CPI print was 7.5. If it continues to stay at this level or go even higher as a result of what you're doing, there's no chance that I get reelected. So then Jerome Powell says, okay, Biden, I don't know what you want me to do, because if I do nothing, the market's going to continue to crash, in which case you probably won't be reelected anyway. And so I can imagine the Biden team getting together and say, well, what's the path of least resistance? And this is exactly what you and I were talking about in Puerto Rico the other day. Yeah. And that takes us right to price controls. And I just did a story on my Rebel Capitals channel, just going through a simple Google search and clicking on the news. And you see there's just story after story after story after story about price controls in the mainstream media. And some of the stories even sympathetic to price controls, arguing that that's what we should do. And I think the more you see this in the news, the higher the probability is that we will get price controls. The big difference there, of course, is in the 1970s, it did create supply shortages, but we didn't go into the price controls with extreme supply shortages. This time, we would go into the price controls with the shelves at the grocery store being 20% barren. Yeah. You're just using that as a proxy. Yeah. And therefore people should expect to see the supply shortages that we've been experiencing in 2020, 2021, 2022 to get even worse. I mean, I said on Twitter, if you think the supply shortages are bad now, just wait till we get price controls. Right. And they're going to get 10 times worse. And that's kind of was my main takeaway from Rebel Capitalist Live. And that's kind of what I'm thinking about right now when I look at the markets.
Yeah, there's a lot to dig in on that, which I want to. But before we kind of go dive down that price fixing kind of rabbit hole. Going back to just the setup that you had kind of framed, which is one thing we know for certain is that they want to get reelected.
Yeah.
And then, but even before that, you kind of documented how basically the Fed had started this QE program in 2008. And really, it was only after Jerome Powell took office and that they really tried to kind of pull that back in 2018. And it ended very badly for them.
Yep.
And they quickly reversed direction. I look at, obviously we can look at history as far back as we want, but really it seems like the Fed, and I don't know if you agree with this, correct me if you don't, but the Fed really kind of changed the way they work in the market from 2008, right? That's kind of when QE got started. And so
big time.
Yeah. So if we look at like from 2008 till now, we've seen this massive increasing Fed involvement, stimulus, et cetera. And only one time they tried to pull back and it didn't end good. But I would say, and again, correct me if you don't agree, but in 2020, they even took another role where they seemed to be almost driving the markets almost preemptively, where 2008, maybe they were trying to catch up from behind it. And it seems like they know what's going to happen if they pull back on the stimulus. It happened. The only time they've tried it, they know what happened. And so if I guess what you're saying is like, if inflation keeps raging, they lose at the polls. So they're kind of forced to pull it. But if asset prices drop, if retirees lose their pensions, if Wall Street gets crushed, I mean, they also have a strong risk of not getting elected, right?
Correct. So the easy out for them, even though they know it's going to destroy the economy, they don't care because I think they're just sociopaths. So if their only singular objective was to get reelected, it's price controls. You can see them saying this, Mark. I mean, they're going to come out and they're, but I'm just saying, you can see the politicians sell this, right? They're going to say, oh, price controls aren't that bad. We've seen it work well in the 1940s. And, I am going to stick up for the poor and the middle class. We're going to take bold, aggressive action. Right. I'm sure those are the words that they're going to use.
For sure.
And of course, they're going to blame it on the entrepreneurs.
Yeah.
They're going to say, oh, these greedy business owners, we really don't have consumer price inflation as a result of excess money supply or as a result of supply chain disruptions created by the government. Let's remember. No. We have consumer price inflation because the entrepreneurs are just too greedy. So they're all colluding with one another and saying, we're going to stick it to those poor people and the middle class by just increasing prices. So what we need to do is we need to fight back against the greedy capitalists. And we're going to do that by sticking up for the poor and middle class with price controls. I mean, you can, the sales pitch writes itself.
Oh, yeah. What about an easier option, or maybe if there's a combination of, so maybe a little bit of price controls, but can't they just easily change the CPI basket as well?
Sure, they can do that. But I think that they continue to run the risk, although it's not just plastered in the media every single day. The average Joe and Jane isn't that stupid. I mean, they don't really understand economics, but they can see the prices of what they're paying at the gas pump go up regardless of whether the media is admitting to it or not.
Right.
Same thing with groceries, same thing with their healthcare bill, their rent payments. So I think that only buys them so much time. But I think to your point, the Fed is really trying to design, for lack of a better word, this soft landing in the market. They know it's overheated, and I don't think they really care if the market goes down by 20%, just so long as it does it over 16 months. Like, what they don't want is a disorderly crash in the market where it goes down by, say, 20% in 2 or 3 weeks. So I think in their minds, like, how can we navigate this and walk this tightrope to where we don't crash the market, but we slowly kind of bring it down, and hopefully that will gradually bring down the rates of inflation as well, which will appease the voters and therefore appease the politicians that I think the central planners and the central bankers answer to at the end of the day. And so I think they're kind of doing that, or trying to do that, with expectations policy.
And thinking in the terms of probabilities, do you give them a high probability of being able to pull that off? Or do you think once the thing starts crumbling down, the domino starts falling pretty quickly?
Well, usually I'd say the probability is very low, but my goodness, they've been able to kick the can a lot further down the road than I would have imagined.
Right.
So I mean, can they kick the can further down the road? Can something, one thing that might give them some cover is if they raise interest rates, uh, that could, that could, let me give you an argument that would give a cross current for people to consider. And I need to give a huge shout out and hat tip to our good friend, Joseph Wang.
Yeah,
He's
great.
yeah, he used, if you don't know Joseph Wang, guys, he's spoke at Rebel Capitalist Live. He ran the New York Fed trading desk. So he actually was in charge of quantitative easing. So he's one of those guys like Jeff Snyder that knows the plumbing of the financial system inside and out. But one of his hypotheses is that if the Fed raises rates, since the way the banking system or the interaction between the balance sheets of the commercial banks and the Fed is so different now than it was in 2008, specifically with IOR, which is interest on reserves.
Right.
So, back in the day when we really didn't have free market interest rates, but we had more of a free market with interest
Well, more
rates.
free market participation.
Yeah, to where it was more supply demand driven. Now what they do is they've just, obviously there's so many reserves in the system that the interest rate would always be at 0%. They could not lift it because it's just flushed with reserves. There's flushed with supply, if you want to look at it that way. So what the Fed has to do, or what they did back in 2008, is they implemented something called IOER, and now it's IOR, interest on reserves. So the Fed will say, okay, big banks, we'll pay you, let's say 1% to keep your reserves here at the Fed. And so the banks have an option. Either they can use that excess balance sheet capacity to create loans in the real economy where, they're, let's say, getting they'd have to get higher than a 1% interest rate in order for it to make sense, because they can get a risk-free 1% just parking it at the Fed. So that's how they could put kind of a floor on the rate of interest. That's what they do now. And so why is that important? Because before this IOR, before 2008, what you would see is if interest rates went up, if the Fed raised the short end of the curve, the Fed funds rate, the amount of interest that banks would pay depositors would go up as well. So you'd see kind of the delta stay the same. So if they raised rates from, let's say rate started at 2% and banks were paying you 1% for a checking deposit. If they raised rates to 4%, usually the checking deposit interest would go up to 3%. So that 1% delta would remain the same.
Right.
But now there really isn't any incentive for the banks to even have depositors because they don't need them. Those depositors were really kind of a prized commodity from the bank because it was a cheap way to get reserves. But now that they're flushed with reserves, they don't need customers, which would explain a lot of what we're seeing in banking today.
Yeah.
But so they don't need these customers. So what can happen is, since they're not really competing for those deposits, if the interest rate, let's go back to that example, starts at 2% and they're paying depositors 1%, if the interest rates go up to 5%, we most likely will not see deposit rates go up with it. They might go up slightly, but not much. So that delta will increase significantly. So what that means is there's more profit going to the banks, the big banksters, for doing absolutely nothing, zero. Right. So then what do they do with that profit? Joseph believes they'll most likely buy treasuries. Now, the Fed is issuing fewer treasuries, a lot fewer than they did in 2020, maybe in 2021. So if they're issuing fewer treasuries, the banks will want to buy treasuries from somewhere. So they get them from non-bank entities in the real economy. When a bank buys a treasury or an asset from a non-bank entity in the real economy, it actually increases the money supply. Those are dollars that did not exist before. So the bottom line here is Joseph thinks interest rates may go up. That increases the profits for the commercial banks. That increases demand for treasuries from non-bank entities. That increases the purchases from the banks to non-bank entities, which increases the quote unquote money supply, or the dollars that are circulating, chasing goods and services in the real economy. So this is a scenario that could play out where higher interest rates actually increase the rates of consumer price inflation and could potentially give a tailwind to the stock market. And then the Fed, might have cover to, continue to raise rates, assuming that CPI wasn't getting out of hand. And I think they would probably try to micromanage this again with the price controls that we were talking about earlier. But my whole point here is there are so many variables, there are so many cross currents, and there's so many unintended consequences that have been created by the Fed changing how they operate from 2008 to today. It's not just quantitative easing, quantitative tightening, Operation Twist.
Right.
It's how they're actually paying the banks for those bank reserves that they have on deposit. No one knows how this will play out.
Yeah. One thing that I picked up from his talk at your event was how the Fed has been rolling over this fixed long-term debt for short-term debt.
Yeah, right.
And so that's a problem, right?
Huge
so now you have all this fixed debt that is not susceptible to these, rate fluctuations. And now it's all, I think, marked, daily. And you start getting some fluctuations, and that could wreak some serious havoc real quickly.
Yeah. I mean, we could just think it through quickly for your audience. If the government has 30 trillion in debt, if all 30 trillion of that was 30 years from maturity, and they're paying a 1% interest rates, well, then short-term rates really don't affect them too much because they basically have a 30-year fixed rate mortgage.
Right.
But let's just assume that all 30 trillion matures in the next 6 months.
Right.
Now all of a sudden they got a big problem, because if interest rates go up in the next 6 months, they've got to roll over that debt at the higher interest rate. And so basically what happens is the government, your drunk, insolvent Uncle Sam, as I call him or her, has become the largest subprime borrower in human history. So we go back to the GFC, and what was one of the main problems there? It's that people got into these mortgages that they could not afford. And when interest rates increased, they had to roll over their debt at a higher rate, or they just had to start paying the higher rate, and they couldn't afford it. So they had to default. And we could see the government in that same position. Obviously, they won't default, but they'll default through creating inflation.
Yeah. And the corporations are also stuck with a massive amount of debt that has to be rolled over. And
great point.
Yeah. And if that interest rate goes up, these businesses will not be able to roll that debt over. And that's going to be a serious problem.
Yeah. And that affects, obviously, their profitability. And we saw what happened in the market today. It's, I believe, what is it, January 17th today? 18th. Okay. So it's Tuesday, January 18th. Market was down 540 points. And S&P down 1.5, I believe, or Dow down 1.5, NASDAQ down 2.6. And, this is a result of kind of that rotation that we're seeing from growth stocks into quote unquote value. I think that's a stretch calling them value, but NASDAQ down more than the S&P, we'll just call it that. But that's because interest rates go up, which means that, those future profits will probably go down. The multiples compress, and that means prices of those stocks continue to go down.
Yeah. Man, who knows how it'll play out. Let's jump one level above that. And so a lot of people don't like it if you or I talk about politics, but you can't understand. They'll give us a comment like "stay in your lane" or something stupid like that. But this is all politics. Like, you can't understand any of these financial things unless you understand politics.
That's right.
We're stuck trying to guess what somebody's going to do. The probability of what they're going to do on action versus how the market works or whatever. But if we go, I want to go up to the international level and see. I want to talk about Russia and Ukraine, China. I think there's a lot going on right there. Before we go up to that international level, there's big implications for that, especially with energy. But if we go down more like at a national level, so we talked about supply chains potentially breaking down, not supply chains. We talked about prices going up. But you talked about the problem with with fixing the prices is that then it leads to shortages, and we haven't had that done before when we're already having a shortage. And so a lot of the reasons why we're having the shortage is the supply chains breaking down. Um, and we're having supply chains breaking down, one, because there's excess demand, but also two, a lot of workers not being available to work and whatnot. What do you
Yeah,
see in
right.
regards to that? So you said that we haven't had price fixing at the time when we already have a supply shortage. So what are you seeing there in that supply shortage?
Well, for the rest of 2022,
Yeah, yeah,
yeah,
and I mean, what the cause of it right now, and is it going to get better or worse?
I think it's going to get worse. I mean,
Okay,
let's just assume for a moment we don't have price controls. So uh, you've got to take a step back and say, okay, how did we get to this position? Like, what caused the supply chain disruptions
right,
that we are experiencing right now? It was not the cerveza sickness, we'll call it. It was the government's response
right,
to the cerveza
for
sickness.
sure. Yeah,
That's what caused this. It was economic distortions created by central planners. So then the question becomes, in the future, are we going to see less of these economic distortions or more of
right.
these economic? I would argue actually that in the short term, we might see less, but in the long term, we'll most likely see more. So I think this new scariant, we'll call it, is going to give the
I like that
government
word.
that's going to give the government kind of a lifeline to backpedal on all of these mandates, which are, I think, very unpopular and would be another kryptonite to them getting reelected. You've got the midterms coming up, and I think that's why you're seeing this 180 turn with the narrative in the mainstream media around, we'll call it the cerveza sickness. I mean, you
Yeah,
saw the CDC come out and they've done a complete 180 on cloth masks as an
yeah,
example. Even I call him Voldemort because you really can't mention his name without getting your video taken down. It's this specific doctor in the United States that
right.
the mainstream media seems to like quite a
Yeah,
bit. But even he came out and said that with kids going to the hospital, you've got to compartmentalize. Are they there with the cerveza sickness or as
with
a,
it, with or without it. Yeah,
with it, or are they there because of it? Right. So even they're coming out. And again, it's this huge 180 in the narrative. And I think that's because politicians are calling them up and saying, hey, I cannot win on this platform. You've got to change the narrative and change it very, very quickly. So with all these people that are in charge of the institutions, I think that's why they're backpedaling. So what that means is that going into the summer, I think that we could see this in the rear view mirror. And that would be fantastic for the economy. Now that there's got a lot of challenges that we're going to be up against,
right.
but in the next 6 months, I think we could see some of these pressures ease. That said, I think they're just buying time until they can take advantage of the next crisis. And if you are a central planner, if you're one of these global elite and your objective is to usurp power and control, you have had banner years in 2020 and 2021.
Right.
I mean, these have been windfall years for you if that is your objective. So I think they realize that if they push too far, then you're going to get uprisings like we see in Europe. We're going to talk about kind of a peaceful protest that I'm going to be participating
Yeah.
in this weekend is another example of that. So they know that they can't push and push and push and push. There has to be a specific limit. Give the people a breather, and then you come back and you take advantage of the conditioning that you've done over the last 2 years, or let's say during the last crisis that they've tried
Yeah.
to take advantage of. So I think going into the next crisis, people are going to be far more receptive to whatever it is they want them to do because of what they've gotten them to do in 2020 and 2021. That's my main point. So, over the next 6 months, I'm pretty optimistic. Obviously, there's no certainties, only probabilities. Got my fingers crossed.
Yeah.
But going into the next 2 or 3 years, I think we're going to see another crisis, whether it's intentional or
Cyber.
unintentional. I don't know. You can be the judge there.
Yeah.
But I think climate change is an example, is a very convenient crisis for them to try to push. I'm not here to say that it's real or if it's fake, or I'll leave that for someone else to debate. But I can tell you one thing, that the global elite and the central planners don't care about clean air.
Right.
Don't care about the temperature of the earth going up by 2 degrees. They're just going to use that as a Trojan horse just to continue to try to take away freedom and liberty from the individuals in society.
Right. Yeah, I want to talk about that. So we'll jump back up to the international level in a second and talk about these wars and potential wars in the future. But interesting that you're absolutely right. We've seen the narrative shifting. I was actually seeing in the email I got today, and it was showing headlines or quotes actually from all the mainstream news.
Mm-hmm.
And it was just quote, 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 quote. And you can see all their quotes are like all matching, and you can see this whole narrative shifting.
Yeah, they get the script. They get the script from the politicians, Mark.
Right.
Politicians call them on the phone and say, hey, we need the narrative to change ASAP, because if it doesn't, we're not going to get reelected. And then you just see the whole mainstream media come out with the same script and the same headlines.
Yeah. And so maybe they have to pull back, ease off until the election. And then, if whatever happens with the election, then they could decide to pick back up. So from that perspective, then one, I guess the data is not really backing up what they want. But two, I guess to your point, also, they're feeling the pressure. And they're feeling the pressure because people are demonstrating all throughout Europe. And let's talk quickly before we jump into the bigger international picture, which I think has bigger implications. But before we jump up there, so these protests are working. They're feeling the pressure from that. And I know there's a really big one this weekend that we were going to talk about. I'm not exactly sure. I haven't read through all the material, but what's going on with that?
Well, it's called, the website is defeatthemandatesdc.com.
Yeah.
And it's something that Chris Martinson, our good friend, Dr. Chris Martinson, told me about last week when he was in Phoenix. And I said, well, I really need to get behind this. This is incredible. I think there's going to be about 50,000 people there that are going to be peacefully just marching from the Washington Monument to the Lincoln Memorial. It's going to be January 23rd. I believe it starts at 11 a.m. in the morning. I'm going to be there. There's going to be a bunch of speakers. I believe Brett Weinstein is going to be there, along with a lot of the doctors that we cannot name that have been interviewed by Joe Rogan recently.
Yeah.
Insane. Might know who I'm referring to there.
Yeah.
But it's going to be a great event, and it's just going to be a fantastic way for people to push back against authoritarians, stand up for freedom, liberty, and free market capitalism. So I'm proud to, I'm not really speaking or anything, but I'm going to be at the event with the Rebel Capitalist team. We're going to be doing interviews. We're going to be live streaming. We're going to be, creating as much content around the event as possible. So for any of your viewers or listeners who want to check it out, I'd strongly encourage you to do so. Again, the website is defeatthemandatesdc.com.
Yeah, that's awesome. So if anybody's in the area, you're close by, if you're, you should get involved. Even if you're just curious, I would recommend driving out there, check it out, show your presence, because it's really been working. I wish I could get out there. I've been traveling for weeks on end. I just got back. So I can't make it, but that's incredible. I'm glad you're doing that. And like I said, I'd recommend anybody go check out that website. And if you can, get out there, show your presence. It's one small thing that you can do, I guess, a little bit.
Yeah, definitely a great cause.
And it's working. It's working. They're feeling the heat on that. So jumping back to up to a higher level, what's going on? It seems like anytime the economy crashes, we have war. It's not that it seems like the war comes right after the economy crash. And so we're at the end of this 80-year long-term debt cycle, right? This 80-year financial cycle. They're out of interest rates. They're out of monetary stimulus. They're out of moves. And now it's just war everywhere. So it's war on health, it's war on climate, et cetera. But then we have this like theater war going on, even, with Russia and Ukraine. I don't know if you've been following that much, but I've been following it from like an energy perspective, and like the EU's pressuring Putin to give them more energy. And then the US is like, hurry up and turn that oil pipeline on so we can sanction you. And then he's like, well, then why would I turn it on? And now there's troops along the Ukraine border. Have you been paying attention to that at all?
I haven't been paying attention to the details. I've just been looking at it through the lens of like natural gas and commodities, resources, but I haven't gotten down into the nitty gritty. For me, it's crucially important, but it's just not that interesting. Just because, to your point, we've just seen this playbook over and
Right.
over and over and over again. It's when the politicians, when their polls and their approval rating gets extremely low, when the economy starts to suffer, this is their playbook.
Right.
This is what they do. They find a boogeyman. And if the boogeyman can't be we'll call it the unmedicated anymore,
Yeah.
which is what Biden has tried to create here in the United States. If that's not working, well, we need an external boogeyman. Well, let's just look at Putin, and then Putin does it to us. And it's just
Yeah.
these politicians globally, they all do it. And this is why we've had so much war over the past X amount of decades,
It kind of creates
hundreds
this
of years.
like artificial nationalism where, oh yeah, let's go against Russia. Everybody, the
Yeah,
US
it's
against
diversionary,
Russia.
Mark. It's diversionary because if you've got this big problem right in front of you in the United States, the politician creates a diversion over here. So
Yeah.
you're not paying attention to this problem called inflation.
Yeah.
Now you're paying attention. Putin. What's he doing?
Yeah.
And then you get, you get fixated on this problem, and then you forget about the main problem. But it's all just a ploy from the politicians to try to manipulate you.
Yeah. And then we had to spend a bunch of money to go to war. And then that money to go to war caused some inflation.
Yeah, and then the loss of life, and then all
Yeah.
the civilian casualties. I mean, the downside is just endless. But it goes back to what I was saying. These politicians, they don't care about you. They
Right.
don't care about society. They don't care about inflation. They don't care about what's right or wrong. They have no moral North Star
Right.
whatsoever. They have no principles. They have no ethical backbone. These people are sociopaths. They have an insatiable lust for power, bottom line. So they're going to do whatever they need to do to try to get reelected. And if that means crush the economy, if that means kill civilians, they're more than happy to do that.
Yeah. It's a shame. It's a shame our system has done that. I was looking at this quote from Lenin. It was John Maynard Keynes actually quoting Lenin. And he said, the way to destroy capitalism is to debauch the currency.
Yeah.
And he went on and on and on and on. And at the bottom, he said, it'll basically lead the system to gambling and theft is what he said. And so kind of we're at this point where like everybody's just out there stealing whatever they want, regardless of the facts. And even gambling is the best way to make money today, right? Quitting their jobs. We saw record quits last month, and everyone has to quit their job to go trade stocks on Robinhood or options on Robinhood or cryptocurrency,
Yeah, and look at the theft. I mean, I think you're right there in California right now.
Yeah.
I mean, I don't know if you followed it, but you had all those people rob the trains and everything.
Yeah.
And now basically you can steal whatever you want in California, and you're not going to get prosecuted as long as it's, under $1,000 or whatever. And you just see complete lawlessness all over, and especially in areas like California. And the insanity just builds on itself. And, I was listening to, again, our good friend Chris Martenson in his interview with, I believe the gentleman's name is Matthias Desmet, where they were talking about this mass formation psychosis.
Yeah.
And in this, the crazier the policies become, the people who are really emotionally engaged to that narrative, they're just going to double and triple down. I mean, the crazier the policies are, the more they will support them. And, I just did a story today on this guy in California who was suggesting that they ban parenthood. You see that one?
No.
Yeah,
No.
he was suggesting that in the name of equality, that they should ban parenthood. They should make it illegal. So what should happen is, let's say, you're someone that has some financial resources. If you have a kid, you should immediately give your kid to the state. And then the state would take your kid and give it to a family that is poor, let's say, or homeless. And then if they have a kid, they'd take the kid and give it to you.
What?
So that these kids it's kind of like this kid swap type of thing. And in their mind, or in the author's mind, and I hope this was a joke. I hope this was him just trolling people who are actually sane and grounded in reality. But I don't. It was on Yahoo Finance. It was on in the USA
Wow.
Today, and it's again this strive towards equality at any cost.
I don't know what's more disturbing, that somebody has that thought, which people are wacko, or that people like Yahoo would actually pick that up.
Who knows?
It's like
But it's the same. But you know what the whole mindset is, Mark, and I think this is kind of the direction that we're going as well. At least the global elite are trying to push us in this direction. It's that the state becomes the parent.
yeah,
That's really what we're talking about here. That's kind of the overall mindset.
yeah,
And I did another story on Australia, and the government is just pushing just straight propaganda
yeah,
directly towards kids. So what they're now trying to get kids to do is, if they're above the age of 14, but if they still live at home and under, their parents, and if their parents don't want them to get the medicine, they're trying to encourage kids to not listen to their parents and do it regardless. And so basically, don't listen to your parents, listen to the government.
sure,
And it's the same mentality that
yeah,
we think that the parental supervision should be at a state level and not at an individual level.
yeah. In California, I don't know about the rest of the country, but in California, in the school system, they've been doing that for a long time. Not specifically that medicine, but you can do, birth control, you can do abortions, all of that without parental consent. So that's been that way for a long time. And I think they're also doing even gene hormone therapy on kids without parental consent nowadays. So that's insane. I just spent last week, I spent 4 days locked inside an Airbnb with Alex Fetsky, and we took the Communist Manifesto and we literally rewrote it and tried to keep the same structure. So there's only 4 chapters. It's about 10,000 words. It's like an hour read. And so we tried to keep the same structure of the book, same 4 chapters, same length of the book. It's just a pamphlet. And we basically flipped it. So the opposite of communism, as we put it together, the opposite of communism is individualism. And he puts the class struggle between 2 classes. We put the struggle between the individual and the collectivism. But anyway, going through that book over and over and over, really dissecting it, he talks extensively about, to your point, not only the breakdown of the family unit, but also even just marriage, right? So he says women should be communal. I can't imagine anybody's going for that. And kids, right? He says that the proletariat or the bourgeoisie only has kids for exploitation. That's the only reason they even have them. So it's just insanity. So when I hear a story like you're telling me, I just think, it's Marxist teaching. That's where that's coming from. It's insane.
That's really what it boils down to. They will never admit this, but these global elite that we're dealing with, whether it's at the World Economic Forum, the IMF, or these politicians, they're Marxists.
Yeah.
They're Marxist. They're Marxists, they're central planners, and they have this worldview that there are a few of these individuals, that the chosen intelligentsia, if you want to call them that are just enlightened. They're just more intelligent than everyone else. And they need to have all of the power and control to micromanage your life because you're just too stupid to make your own decisions. This is their worldview. And if that's your worldview, then all these other things like price controls, as an example, like them trying to be the parent for your kids, them trying to micromanage the economy, creating quantitative easing, central bank digital currency, all these things make sense.
Yeah. And so that's why we wrote that book, to kind of try to shine a light on that. So it's not out. We'll talk more about that later. But let's to wrap this up, if you can. And this is a big ask. I'm kind of putting you on the spot here, but I'm sure it's something that you've thought about. No, in a world of no probabilities. And you've already kind of laid some of this out, but what do you kind of see happening with the markets the rest of this year? I mean, you already kind of said we're in election years. Do you think we're just kind of a stagflation throughout the year? Things kind of stay flat, little plus and minus? I mean, do you see a big crash this year, more inflation, or kind of what are you thinking this year?
Yeah, so my base case with the stock market is let's just assume the Fed is going to execute on their stated intentions. So that means tapering down to zero. They're going to raise rates at least 3 times. And while they're raising rates, they're going to start decreasing the size of the balance sheet.
So are you saying that you think that's probable they'll do that?
Well, it's like a chicken or the egg type thing, because they're going to do it if the stock market lets them do it.
Okay.
But I don't know how far the stock market is going to allow them to go, right? So assuming they do that, my base case would be we see a disorderly, I don't want to call it a crash, but a disorderly downtrend, let's say, in the market over 2 or 3 weeks of probably 15-20%. We could get into bear market territory.
Right.
Then I think they're going to be left with a very difficult decision. If the CPI rate has flattened out or actually is going down, which it could because of the base effects there,
right?
Then I think that gives them some more cover to try to come in with a Fed put, or do something for the government to come and try and, CARES 2.0, just basically government deficit spending. That gives them some cover there, but I don't know how long that lasts. And then depending on why we get the crisis, then they're going to need to produce more and more and more. So I think my base case would be they're going to continue to raise rates. That's going to create a stock market disorderly crash. They're going to come back with some sort of preventative measure that's going to increase the rate of inflation. And I think they're just going to try to buy time between now and the midterms with inflation, and it's probably going to get, it's going to increase. It might flatline, but it'll increase headline CPI after we get all of these, additional quote unquote money printing. I hate to use that word because it's not really what's happening. Yeah, but in the mind of the average person, that's what would allow them to blow more air into these bubbles. So that being said, I think what the main takeaway is, what should the average investor do if you're trying to, kind of build this financial fortress to have the best probability of maintaining or increasing your purchasing power? Obviously, we can't give financial advice, but what I'm doing is I'm okay having a cash position right now. Like, I understand, I'm not saying 100% in cash, nowhere even close, but I'm okay with a certain percentage, maybe a higher percentage than I was okay with in 2021 in cash. I realize you're most likely going to have a negative carry against the stuff that you buy daily, but I think that that's okay because of the opportunity for the value of those dollars to increase, not against groceries, but to increase against other assets that you might want to buy, i.e. stocks, commodities, gold, potentially even Bitcoin. Because if we do have a big down, a disorderly crash in the stock market, temporarily, I want to say temporarily, usually what would happen is gold would drop, Bitcoin would drop, because the hedge fund managers and the big pools of money are going to sell any asset that's liquid, any asset that's a bid. So that could be a short-term buying opportunity. And because of that, I like to have cash right now, even if it's a negative carry.
Yeah, and you can look at 2018 and 2020 as good examples of those.
Yep. And with gold going back to 2008.
Yeah, they're tough to trade, but if you have some cash, some dry ammo, and or gunpowder, as you call it, and have your shopping list ready, then maybe you can take advantage of that.
I think it's a great idea. Yeah, I'm not doing anything right now other than a little cash and just start building a watch list.
Yeah. Cool. Good stuff, George. Appreciate the insight. Always love talking to you. Super happy you're going to get to go do that walk this weekend. If anybody's paying attention, I'm going to make sure to put the link down below so you can go check that out. I recommend that you do. I wish I could get there. And with that, anything else that you want to bring attention to?
That's it. I sincerely appreciate the opportunity to come on, Mark. It's always great to talk to you. And again, for anyone that's interested in joining me this weekend, it's defeatthemandatesdc.com.
Defeat the mandates. Got it. Thanks, George.
All right. Bye.